Welcome to Talk Tickers. Today, we are digging into what was truly a pivotal second quarter for Cohen Company.
So let's just start with the headline number, because wow, a 455% year-over-year explosion in revenue. I mean, a number like that, you've just got to ask, what in the world is going on here? We're about to find out.
And listen, this wasn't just some top-line story. Look at the bottom line. This is a massive swing from a pretty deep loss last year. We're talking $1.47 in the red to a solid 81 cents of pure profit. That's a huge turnaround. All right, here's how we're going to break this all down. We'll look at what drove this big turnaround, hit the key numbers, then get into their SPAC strategy, which is key. After that, we'll see how they stack up against the market, what's coming up, and then we'll give you our final take.
So, first up, the turnaround itself. The big question is, how did they pull this off? What was the secret sauce this quarter?
Well, if you listen to the earnings call, management couldn't have been clearer. The CEO, Lester Brassman, basically said it all comes down to their boutique investment bank, Cohen Company Capital Markets, or CCM. That was the engine, plain and simple.
Okay, let's get into the nitty-gritty. Let's look at the numbers, because this is where you can really see that turnaround story in black and white.
So total revenue, nearly $60 million. And to put that into perspective, just think about this. A year ago, in the same quarter, they did $10.8 million. That is just a gigantic leap forward.
But here's what's really important. Where did that $60 million come from? Look at this breakdown. The new issue and advisory business, that's their investment bank, it brought in over $37 million. It's not just the biggest slice of the pie, it is the pie right now. That's the whole game.
And it wasn't just revenue. They translated that into actual profit, $1.4 million in net income. And here's a big vote of confidence from management. They declared the quarterly dividend again, 25 cents a share. That's them telling you, yeah, we think this is for real.
Now, a quarter like this doesn't just happen by accident. It's all part of a very specific strategy that they call the transactional flywheel. And it's pretty clever. Let's walk through it.
Okay, so check this out. It's a cycle. First, they make money, advisory fees from their investment banking clients. Then they take that cash and pour it into new things, like a trading desk specifically for SPACs. That then lets them sponsor their own SPACs, which, you guessed it, generates even more revenue down the line. It's this awesome, self-feeding loop.
And the big payoff for this whole flywheel is something called a de-SPAC. You've probably heard the term. It's basically the moment when one of their SPACs finds a private company to buy, and boom, that company becomes public. For Cohen, that's the finish line. That's when the real value gets unlocked.
And we have a perfect example of this coming up. They have a SPAC that's set to merge with a Bitcoin company called ProCap BTC. Now, here's the kicker. Cohen gets to keep over 2 million founder shares. You can imagine, if that deal closes and does well, that could be a huge, huge catalyst for their own stock price.
All right, so the quarter was great, but you have to ask, was it just them, or was the whole industry on fire? Let's put their performance in context.
So looking at the past year, Cohen has crushed the S&P 500. I mean, more than doubled it. But it's interesting, it's actually lagging its direct competitors just a bit. What that tells you is, yeah, Cohen is executing, but they've also had a pretty strong wind at their backs from the whole industry doing well.
And how did the market react to this incredible quarter? Well, it was a little weird, actually. The stock gapped up, but then sold off during the day. It still finished up almost 5%, which is great, but that intraday action, that smells like a classic buy the rumor, sell the news situation, especially for a small stock like this where people are taking profits.
Okay, that's the past. Let's look forward. What should we be watching for? We need to talk about the good stuff, the catalysts, and, of course, the risks.
They've laid out a pretty clear roadmap for us. They're telling us their investment banking pipeline is strong for the rest of the year. And of course, everything is leading up to the big one, that ProCap BTC de-SPAC, which they expect to close by the end of the year. That's the main event.
But you got to be realistic. There are definitely risks here. First, this is a microcap stock, which means it can be incredibly volatile. One big buyer or seller can move the price a lot. Second, their whole business depends on the stock market being healthy. If capital markets freeze up, so does their revenue. And let's be honest, the appetite for SPACs can change on a dime. So, a lot has to go right.
So, let's wrap this all up. What's our call on Cohen going forward? How should we be thinking about this?
Really, it boils down to this classic investor dilemma, right? You've got a company that's firing on all cylinders with this great flywheel model and a massive catalyst coming up. But at the same time, you have all those risks that come with being a small company in a very cyclical space. So here's our call. We're rating the stock outperform. We think Q3 revenue will probably come down a bit from this monster Q2, but it'll still be very strong thanks to that pipeline they talked about. As for the stock price, expect it to be a bumpy ride. That's just the nature of this stock. But we do see it trending higher as we get closer to that ProCap deal and the market starts to really get excited about it.
And of course, remember, this is not financial advice.